Welcome back to the Dividend Diplomats YouTube channel, everyone. You know us by now. We're Lanny and Bert. We are the Dividend Diplomats. We're talking to you about dividend investing, growing your passive income, and reaching financial freedom. So what are we doing today? We are talking to you about a Dividend King that is showing signs of undervaluation. Here's the question, though. Are they a screaming buy, and are we going to be adding this Dividend King to our portfolios?
Guys, smash the subscribe button. Give us a nice thumbs up. We're talking about two stocks that I don't think either of us actually own here on this channel. And gosh darn it, they've always been stocks that you kind of wish or that you wish you could have bought. But maybe now is a good time looking at the current metrics as we approach a potential recession, given our inflationary pressures and high interest rate environment. You're always looking to build out a nice, well-rounded dividend stock portfolio. And it's always nice to touch on different areas, different companies and businesses that you know and recognize. And I would say these are two stocks that we're going to pit together in the ring to see if they deserve a spot in our portfolio.
And you're absolutely right, Lanny. It is very critical to make sure that you're buying all kinds of dividend stocks and that you're covered everywhere. We have the diversification through ETFs, through VYM, through SCHD, elsewhere. But especially as we're buying out our individual stocks and we're doing it, it is always great to consider those sectors, especially the ones that are untouched. And since we've been investing for over 10 plus years each, it's kind of funny that we've never found a way to get into this sector. I think it's kind of funny actually, especially when we're talking about the company we're going to be featuring here today.
Yeah, I mean, we've been investing each of us both over 10 plus years, and it is wild that a Dividend King hasn't made their way into our portfolios. Guys, we're talking about Lowe's today. We're talking about the biggest home improvement or one of the biggest home improvement stores that there are. A lot of DIYers out there. I know during the recession, Lowe's and Home Depot both generated significant revenue and profits as everybody was at home wanting to make improvements to their house due to the shut-in environment that we were in. And man, what does it look like now for big Lowe's?
That's right. And one of the reasons too we don't focus on Lowe's, they're Dividend King. We've been sick and tired of getting dividend cuts during the year. We just received that big Paramount cut. We received the big Intel cut earlier in the year. So it's time to look back, focus on the quality dividend stocks. And that's where I think Lowe's is unique in this sector. They've increased that dividend for 59 consecutive years. So they easily became that Dividend King. So when you see potential signs of undervaluation, especially when we talk through their earnings here and we run them through the screener, it's very interesting. It might be the time to finally initiate that position in this home improvement sector.
So let's dive in. We're going to focus on the DD stock screener, focus on the price to earnings ratio, payout ratio less than 60%, dividend growth, the history of growth, and we'll throw in the dividend yield. And again, look at the performance of the stock themselves because we know you guys do like to see that. And before we jump in, let us know in the comments, do you own Lowe's or Home Depot? Which one do you want to buy after watching this video?
That's right. And that's what we'll do. We'll compare all the metrics to Home Depot. So let's jump in. The closed prices are going to be as of Friday, 5/12. Lowe's closed just a hair above 200 at 203.26. Their forward EPS is 13.65. That's a PE ratio of 14.89, below the S&P 500, which is sitting right now in the low 20s and has kind of been fluctuating around there. Lanny, how does that compare to Home Depot?
Home Depot was trading at $290.47, guys. EPS measures from Yahoo, expectations on going forward, $15.57. So actually, the price to earnings ratio is higher than Lowe's. It's at 18.66. So Lowe's wins the PE battle.
I'd say they have the lowest PE ratio of the group. Payout ratio. We always use that 60% threshold. We think a perfect payout ratio is between 40 to 60% because that allows a company to reinvest its earnings in the company, but also reward shareholders with a very nice, juicy dividend. Lowe's annual dividend is $4.20. That gives them a payout ratio of 30.77%. So even below our perfect payout ratio range.
Comparing that to Home Depot, ticker symbol again, HD. You're looking at a 54% payout ratio. Still good, still within the 40 to 60, right in the middle, a little bit above that. The Lowe's has the lower payout ratio, but we'll have to see then what does that mean on the dividend growth rate.
Interesting. So Lowe's has a 5-year dividend growth rate of 20.67%. I've already mentioned they increased that dividend for 59 years. Last May, they announced a 31.3% dividend increase. So Lowe's is not shy. They are not afraid to announce massive dividend increases. It's nice to see a 20% 5-year average dividend growth rate is phenomenal for any company, especially in this sector. We'll see if they're going to be able to keep that up because that's a very high bar to keep. How does Home Depot compare?
Yeah, they're at 16% on their growth rate for
Cool.
13 years. So not as long, not as big, but still pretty decent for Home Depot.
Yeah. I mean, take a step back. How many companies would you kill in your portfolio to have a 16% 5-year average dividend growth rate, Lanny?
One or two.
Yeah, Paramount, Intel, and all the good stuff. So again, you have to start somewhere to become a dividend aristocrat and a dividend king. Home Depot's more than halfway there with that 13%. So it's a nice little streak there for them. And their last dividend increase, just for everyone's reference, for Home Depot was 10% in February. So yeah, very solid dividend increase, especially in these times. Let's look at the yield though. Lowe's yield is 2.07%. So they're not the highest yielding, but at least they deliver on that strong double-digit dividend growth.
Yes, they do. So guys, again, 2.07% yield, 2.88% yield for Home Depot. Lowe's does match up well with that higher growth, lower yield. Home Depot's got a great balance with an above average yield, but still an above average dividend growth rate. Both stocks are pretty flat to up this year. But Home Depot is actually down, like Bert was also referring to, 14% this year. So it's pretty interesting, whereas Lowe's is just up and up.
Yeah, they look pretty similar to your point, but when you run them through the screener, here again, I'll run Lowe's and Lanny, you can summarize Home Depot's. Lowe's 14.89, their payout ratio is 30%. That 5-year growth rate's 20%. 59 years increase, they had 2.07 yield. How do those other metrics look for Depot?
Yeah, Home Depot almost a 19 PE, a 54% payout ratio, 13 plus years of growing dividends at an average rate of 16%, with the yield approaching 3% at 2.88%. So again, not bad stock. Not both are great stocks. Both do well in portfolios. I'll kind of leave it at that.
Yeah. The thing that was interesting to me when we were looking through in this is I didn't realize Lowe's was, from just a pure PE standpoint, was that much lower than Home Depot right now. It kind of caught me by surprise that they were below 15, and that seems to be a potential great entry point for a dividend king, which, some kings aren't, it's not always easy to find dividend kings on special. We found that when we looked at our top 5 foundation stocks last week, and you saw that most of the big ones had PE ratios above the S&P 500.
Yeah, I mean, I think Lowe's is expecting almost 90 billion in revenue, almost $14 in earnings per share this year. So again, I think that they're a great stock to buy. If you're just starting out and you want to really see your yield on cost or your YOC grow pretty significantly, buy Lowe's stock.
Yeah, no, I agree. I think you could make the argument that there's room to start building out one of these two. And you know what? If we leave this video, you come in here and say, I prefer Home Depot over Lowe's, we get that too. Because Home Depot's metrics, like you said earlier, Lanny, don't look bad either. Home Depot's are looking pretty solid too.
Yeah, it takes a long-term investor, I think, on all of these stocks. These are buy and hold for the long run. So let us know again in the comments. Do you own Lowe's stock? Do you own Home Depot? Based on the metrics you've seen from us, which stock are you buying right now? Let us know in the comments below.
And if you haven't already, subscribe to the channel, give this video a thumbs up, and remember, if you're not with us, you're against us.
That was Bert the Hurt and Lanny from the DD, over and out.